If a scammer tricked you into sending money from your bank account, stop what you're doing and watch this entire video, because before 2026, that money was almost certainly gone forever. Banks would look you in the eye and say there was nothing they could do. And technically, they were right. You authorized the payment. That made it your loss. Full stop. Zero recourse. But that just changed. There are two new banking rules hiding inside something called NACHA, the rulebook that governs every electronic bank transfer in America. And together, they've created the closest thing to an undo button for fraud that has ever existed in this country. In the next 15 minutes, I'm going to give you the exact script, the exact words, and the exact escalation process to use them. Let's get into it. Before we get into the rules, let me show you exactly how bad this problem has gotten. Because if you think this is rare or that it only happens to careless people, you need to hear these numbers. The ACH network is the system your bank uses to move electronic payments. In 2025, it processed 35.2 billion payments, valued at $93 trillion. That is the financial plumbing of America. Every direct deposit, every bill payment, every bank transfer, and 93% of American workers get their paycheck through it. Fraudsters know exactly how to exploit it. The old fraud controls were built around one type of problem: unauthorized debits, where someone pulls money out of your account without your permission. But fraudsters figured out a workaround. They stopped stealing. They started convincing. This type of crime is called authorized push payment fraud, APP fraud, and it's exploding. In a baseline scenario, APP fraud losses in the United States could reach $14.9 billion by 2028, up from an estimated $8.3 billion in 2024. And in an aggressive scenario, where AI-driven fraud outpaces the defenses, that number climbs as high as $18.2 billion. How do these scams play out? Business email compromise, vendor impersonation, payroll fraud. Someone pretends to be a person or a company you trust. You send the money, and it's gone. The FBI logged 21,489 business email compromise complaints in 2023 alone. $2.9 billion in losses, second costliest type of cybercrime in the country. And the manipulation is only getting more sophisticated. Fraudsters are now using generative AI and deepfake technology to impersonate people at scale. Targeted, realistic, automated. Here's the part that stings. App scams work because you clicked the button. You made the call. Banks looked at that authorization and said, "Your problem." That framework just got cracked open. NACHA, the National Automated Clearinghouse Association, runs the payment system for every electronic bank transfer in America. Every bank follows their rules, no exceptions. NACHA rolled out a set of rule changes specifically designed to do two things: catch fraud earlier and give victims a real shot at getting their money back. Inside that package are two mechanisms that change everything for everyday consumers who've been scammed. Mechanism 1, the expanded R06 return request. Return code R06 isn't new. It existed before, but it was narrow. Your bank could only invoke it in very specific situations, like sending to the wrong account or duplicating a payment. The new rules blew that wide open. Here's what changed. An ODFI, your bank, the one that sent the money, can now request a return from the RDFI, the receiving bank, the one holding the fraudster's account, for any reason. Any reason. That includes fraud. That includes being scammed. Mechanism 2. The 10-day RDFI response mandate. Here's where it gets even more powerful. Before this rule, even if your bank sent an R06 request, the receiving bank could ignore it. No obligation, no timeline, no accountability. Your bank would be shouting into the void. That silence is now illegal. Upon implementation, the receiving bank must advise your bank of its decision or the status of the request within 10 banking days. 10 banking days, 2 calendar weeks. They must respond. Now, I want to be completely honest with you here. The receiving bank is not required to return the money. Compliance is still at their discretion, but they are required to respond, to engage, to be on record. That is a massive shift. Speed in fraud recovery is everything. These rules improve the odds of recovering funds when fraud occurs, and they aren't future promises. The R06 expansion went live October 1, 2024. The 10-day response mandate went live April 1st, 2025. These rules are active, they are law, and most victims have no idea they exist. The R06 expansion is just one piece of a much larger overhaul NACHA has been rolling out in phases. The 2026 NACHA Fraud Monitoring Rule rewrites the book. Fraud detection used to be a narrow, vague requirement that banks could essentially self-define. No guidance on what their systems actually had to do. That era is over. Here's the new enforcement timeline. Phase 1, effective March 20th, 2026. Large originators with 6 million or more ACH originations in 2023, third-party processors, and major banks must meet new monitoring obligations. Sending banks must implement enhanced fraud monitoring. Large receiving banks must implement ACH credit monitoring controls. Phase 2, effective June 19, 2026. The same requirements extend to all other originators, processors, and receiving banks. What does credit monitoring mean for you? It means the bank holding the scammer's account now has formal, documented obligations to identify suspicious incoming payments. This is specifically designed to fight credit push fraud, one of the fastest growing and hardest to detect fraud types in the system. Banks are also now required to define fraud using a new legal term, false pretenses, meaning the inducement of payment by a person misrepresenting their identity, their authority to act on someone else's behalf, or the ownership of an account. That definition covers virtually every common scam. Fake tech support, fake government agents, fake romance partners, fake investment managers, fake vendors. If you were lied to, it now has a legal name in the banking rulebook. Okay, this is what you came for. You've been scammed. The money left your account. Here is your step-by-step playbook, starting the moment you realize what happened. Step 1. Move within hours, not days. Time is everything in fraud recovery. Once transferred, funds can move across multiple accounts within minutes. The window where recovery is most realistic is the first 24 to 72 hours. Don't wait. Don't second-guess yourself. Act immediately. Step 2. Call your bank's fraud department, not customer service. Do not call the general number. Do not go to a teller. You need the fraud department or ACH operations team directly. Ask to be transferred immediately. When they answer, don't just say, "I was scammed." Use this script. I need to report an ACH credit push fraud transaction, and I'm formally requesting that your institution file an RDFI request for return using return code R06 under the NACHA operating rules. I want this escalated to your ACH operations team. I also want to note that the receiving institution is required under the April 2025 NACHA mandate to respond to this request within 10 banking days. Please document this call, provide me with a reference number, and confirm in writing when the R06 request has been transmitted. Why does that language matter? Because when you alert your bank quickly, with clear, specific regulatory language, your odds of getting that money back go up dramatically. Vague language gets vague responses. Precise regulatory language gets documented action. Step 3. Provide every detail you have. Have this ready before you call, the exact date and dollar amount. The receiving account information. Check any email, invoice, or message from the scammer. Screenshots, emails, texts, any communication. The name or business name used. And state clearly which misrepresentation applies: identity, authority, or account ownership. That maps directly to NACHA's false pretenses definition. Step 4. Escalate if you hit resistance. Some frontline fraud agents won't know what R06 means. Don't accept a dead end. Use this. I understand you may not be familiar with this specific code, but I'm asking you to escalate this to your ACH operations manager or compliance officer. Under current NACHA operating rules, my originating bank has the right to file a request for return under R06 for any reason, and the receiving institution is obligated to respond within 10 banking days. I need this on record. Can you please connect me with a supervisor? Step 5. Follow up in writing. After the call, send an email or certified letter to your bank's fraud department restating everything from the call. Document the reference number. Set a reminder for 10 banking days from submission. If you haven't received written confirmation by that deadline, you have grounds to escalate, including to your state banking regulator or the CFPB. Step 6. file a police report and an FTC complaint. A police report creates an official record that strengthens your bank's case when filing the R06. File one even if local police can't do much. Then go to reportfraud.ftc.gov and file with the Federal Trade Commission. Federal paper trail. I need to be straight with you here, because false hope is just as damaging as no hope. The R06 return request is not a guaranteed refund. The receiving bank can deny the return. They can say the funds are gone. They can cite their own policies. But here's what's changed. They can no longer ignore you. They are on record. Their response, whatever it is documented inside the NACHA Risk Management Portal. A new feature went live in that portal specifically to log these exchanges between banks. This creates an audit trail that didn't exist before. Why does that matter? Because accountability changes behavior. For the first time, receiving banks have a defined, documented role in monitoring the ACH payments they receive. When a bank knows its response is logged and reviewable by regulators, the calculus changes. Your best-case scenario, the fraudster's account still has funds, the receiving bank cooperates, and the money comes back, most likely when you act fast. Your worst-case scenario, the money's already been moved and the receiving bank declines. In that case, your documented R06 process becomes evidence for a civil claim, a CFTB complaint, or a regulatory escalation. Either way, filing R06 costs you nothing. Not filing it costs you everything. Before these rules, if a fraudster convinced you to send a wire or ACH payment, you had almost no legal infrastructure to fight back. Because you authorized it, the loss was yours. The 2026 NACHA framework is the first time in American banking history that receiving banks, the institutions holding fraudsters' accounts, have been formally brought into the fraud response chain. They now have defined roles, documented obligations, regulatory exposure. Compare that to what other countries have already done. Starting in October 2024, payment service providers in the UK must reimburse APP fraud victims, mandatory by law. The US isn't there yet. We don't have mandatory reimbursement, but the 2026 NACHA rules are the clearest signal yet that the tide is turning. These new rules fit together like pieces of a puzzle, all working toward the same goal: reducing credit push fraud and recovering from it faster when it happens. And the fraud problem isn't going away on its own. Impersonation scams are up more than 400% since 2020. Fraudsters are using AI and deepfakes to run targeted scams at scale. The scams are getting smarter. The rules are finally catching up. And right now, in this window, the consumers who know about R06 and the 10-day mandate have a real advantage over the ones who don't. Let me bring this home with your complete action list. If you were scammed today, 1. Call your bank's fraud department immediately, not customer service. 2. Use the words R06, return request, ACH credit push fraud, 10-day NACHA mandate. 3. Request escalation to ACH operations or compliance if needed. 4. Get a reference number and written confirmation. 5. File a police report. 6. File an FTC complaint at reportfraud.ftc.gov. 7. Follow up in writing within 24 hours of your call. 8. Set a 10 banking day deadline on your calendar for the RDFI response. If you were scammed in the past and didn't know about this, depending on how recently it happened, it may still be worth making the call. The R06 expansion has been active since October 2024. You may still have a window. Call your bank, reference the rules, and at minimum, get your complaint documented. What not to do? Don't accept "there's nothing we can do" as a final answer. Don't call the general line and give up when they seem confused. Don't wait more than 72 hours if you can help it. And don't forget to document everything in writing. The NACHA rule changes of 2024 through 2026 are the most significant shift in consumer fraud recovery rights in the ACH system's history. Quick response times can mean the difference between recovering stolen funds and permanent loss. You now know something most people, and frankly, many bank employees don't. Use it. If this video helped you, share it with someone who needs it, and subscribe, because the banks aren't sending you a press release when the rules change. That's what this channel is for. I'm not a financial advisor or legal professional. This video is for educational purposes only. Always consult a qualified attorney or financial professional before making any decisions based on what you've seen here.